please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
To track the technicals of trade now, Ashwani Gujral joins in. Hi Ashwani, good afternoon. What are you making of this extended weakness that we're seeing in the market?
See, the sense seems to be that at least on the banks, all but one bank are in the negative. So the bank nifty is breaching the range on the downside, which is about 25,700 thereabouts. And that's bringing the nifty down with it. The nifty has failed to cross the 20-day moving average, which was about 10,350. So that's not a good sign. And hardly two sectors are in the positive, energy and IT. So right now you should be getting out of long positions for the moment, and maybe even take shorts with a stop above today's high, because it's clear that on several attempts we have failed to get past 10,380, 400, and particularly banks, none of the banks are able to show too much strength, and now we are beginning to cover the Moody's day gap. So that's not a good sign, and for the moment the idea is to have a short trade and look for whatever downside we can get. Maybe 25,200, 300 can happen. As far as individual stocks are concerned, Century Textile is a sell with a stop of 1330, target of 1280. BOB is a sell with a stop of 182, target of 170. And Colgate is a buy with a stop of 1030, target of 1100.
Okay, well, those are your recommendations. But Ashwani, do you think that majority of today's decline is what's happened with the global markets, and how linked are we in terms of what's happening globally, say with Shanghai and even say Europe, which is down?
You know, if it's going to rain, it's going to rain. You can choose the excuses. It's June, that's why it's raining. It's September, that's why it's raining. Broadly, we could not show follow-through buying post the Moody's upgrade. And that is where, the bulls which got in on that news, they are kind of leaving positions. Now, yes, there is a bit of global uncertainty, up and down, etc. But generally speaking, I would think that the market is not able to see great amounts of follow-through post 10,350, 10,400. So maybe it needs to shed some long positions and make a lower base from where a sharper, more sustainable rally can come in.
All right, Ashwani, thanks very much for your afternoon trades. We'll take a quick break and come back. The market is extending its losses as we speak, so perhaps heading closer to that 10,300 odd mark. More in the market when we return. We will stay with the market for now. I think there is some news flow coming through, so we'll just wait by for that. For the moment, just a quick check on some of the stocks which are in focus. So let's pull up Infosys. For one, that stock has been a big leader in trade through the day today. In fact, if you pull up the contribution chart, you'll see that Infosys is still the top contributor, giving about 11 odd points, and it's actually what's keeping the market from going absolutely under. And also helping a bit is Reliance, although they have pulled back quite a bit. But other than that, a lot of the stocks are actually, exerting pressure, and the market heading towards the 10,300 odd market.
Yes, absolutely. Well, it is, the bank nifty which is actually seeing that underperformance come through now. In fact, at the low point of the day for the bank nifty at this point in time, we're down around 0.4%, and maybe the contribution plate of the bank nifty constituents which is flashing on your screen. So like you can see, it is only IndusInd Bank which is just about managing to hold up in the green at this point in time. But maybe we can get in some opinion at this point. Let's get in some market opinion. Gautam Shah, and what his take is on the markets right now.
So the way the setup is right now, we would like to believe that the market is preparing for an upside breakout. I think 10,100 to 10,350 broadly is the zone in which the activity is taking place. And once this 340, 350 area on the Nifty gets taken out, which my view is could happen very soon, then we should be on course to test lifetime highs and then towards that level of 10,600. So even at current levels, I think it's really justified to go long. The sting of the negativity that we saw on the charts has been absorbed very well in the last many weeks, and I would like to believe that any dip towards the 10,000, 10,100 area should be used as a buying opportunity. You are seeing the oil and gas stocks take leadership. So there I'm referring to Reliance, which has done phenomenally well. Some of the other names in the market, some of the capital goods stocks have done exceedingly well. Technology as a sector has made a comeback. That index was sleeping in a range for about 6 months. So that breakout has taken place a couple of weeks back. Given this, I think there are a lot of pockets that will help the market during every correction. And that's possibly the reason you are not seeing a very deep correction in the marketplace. Auto and capital goods, I think these possibly would be our 3 bets in the market, and I strongly believe that infrastructure, reality and textile, I think these are the 3 spaces that could potentially be the dark horse.
All right, we've been talking about Infosys, and now we understand that the search for the CEO is gaining momentum. The CEO announcement, in fact, could be around the corner. Rukmini Rao joins in with the very latest on what she is picking up. Rukmini, what have you heard as far as this succession exercise is concerned?
While deliberation on succession still continues at Infosys, and the board and the remuneration committee is yet to zero in on a candidate, what we have picked up from highly placed sources is that the interim CEO of the company, Praveen Rao, has emerged as the favorite and the front runner as far as the next CEO of Infosys goes. Primarily because Praveen Rao fits into every category that the board members have been talking about. He is an Infosian, understands the ethics of the company. He is an insider and has been with the company for the longest of time. He has been a part of the Vishal Sikka's management, and also now continues to be Infosys. So there's going to be absolutely no problem as far as transition goes. And in fact, he ends up being the most favorite as the next CEO at this point in time. Also, given the fact that the other 2 people who were being spoken about as the next CEO, that is Ashok Vemuri, categorically going on to deny that he's going to join Infosys, and also B.G. Srinivas, what we've understood, has refused to take up this role, leaving Praveen as the front runner for this job at Infosys. And we should be expecting this announcement very shortly, is what we've been given to understand. But of course, we will have to wait for the official release. However, Infosys has gone on to say that they do not comment on speculation, and they have nothing more to add on the CEO search other than what the management had elaborated in Q2 results. Back to you.
Rukmini, thanks very much for that. Big news coming through. The president has given the assent to the ordinance amending the bankruptcy code. This was expected any time today. It has come through, and Lata is with us. Lata, along expected lines?
Yes, the president never sits on an ordinance. It's normally signed in hours, so it was always expected to come. In fact, I expected it even yesterday night. Well, the key point is what we broke from sources has been carried out or not. That's the question that we would be wondering. We had unimpeachable sources telling us that among the things that the amendment will make a pass into law is that willful defaulters, those accused of fraud, those who have a fraud charge against them, accused of siphoning money, will not be, those who are under Companies Act banned from being company directors. These are the guys who will not be eligible to put in applications to buy up assets, whether it is their own or whether it is some other assets. They will not be entertained to be bidders for NPAs in the NCLT. The second thing we got, and that is where we were a little doubtful, is whether it is a willful defaulter who has turned an NPA, or whether anyone who has an NPA will not be allowed to bid. Chances are a willful defaulter who owns an NPA or who has turned his asset into an NPA will not be allowed to bid. That one point clarification is needed, for which we need the text of the ordinance itself, and at the moment I am not able to see it in any of the websites. So although we know for a fact that the permission has been given and that was always expected, we are not any the wiser as to how exactly life changes for bankers and for bidders of projects. How does it change for promoters whose assets have become NPA? These are the three interested parties: bankers, promoters whose assets have gone bad, and new bidders. If the promoters are not allowed, or there are serious shackles in their bidding, life becomes easier for the outside bidder. There's one competitor less, and he's a very serious competitor who knows his asset. For the bankers also, it's in a way negative, because there are fewer bidders if the inside guy is not allowed to bid. But from a government's point of view, it will have a very good deterrent effect on new NPA generation if they make it difficult for those who are defaulters to come and buy back their own assets at a lower loan cost. So we have to really see what the ordinance says, but it is important that the government has moved it in the form of an ordinance, and therefore it gets more teeth. Actually, we have Uday Bhansali of Deloitte joining us. Uday, good afternoon. I'm sorry, we are not any the wiser about the contents of the ordinance, except the source-based details we gave you yesterday. But the President has given his assent. What are your first thoughts?
Right. So, Lata, I'm as much in the dark as you are. So really nothing further than yesterday.
Yeah.
I think just overall the fact that the intent of the government is to willful defaulters from bidding through this process, whether they are promoters or otherwise. I think it's a good move. I think in the long-term interests of the company and the assets ought to be revived. And in a sense, it's just something
Uday,
forward.
Uday, all of us, the newspapers took it from us. We had already broken some of the contents of that ordinance yesterday. And that said that it explicitly provided for the committee of creditors to consider the viability of a resolution plan as important. From what you heard, what is your sense of how it changes the balance for bankers, promoters and new bidders?
Right. So, see, clearly a fresh bidder or a new resolution would be in an advantageous position, not having the baggage of any history on that asset. And clearly the COC will look at the quality of the plan in terms of upfront funding, in terms of the debt revival package, weighted average maturity of the debt, the takeover of existing liabilities, taking care of not just financial creditors but operational creditors, statutory authorities, workers, etc. So I think overall, the promoters and sort of defaulters are put into one bucket. And if there are superior plans available, clearly those would stand a better chance.
Okay, I don't know if can we go that far that promoters and defaulters are put in one bucket?
Absolutely. You see, ultimately, people are going to assume the successful applicant is going to assume debt of the company and the business moving forward. So the banks need to assess what's the ability to service that debt, the credibility of the applicant. We don't want a recurrence of this problem.
Do you get the feeling that the promoter is disadvantaged after the ordinance?
You see, it will depend on case to case. There are certain assets where there is a lot of interest and, clearly where there are several alternate bidders, they would be at a disadvantage, particularly if there are issues in forensic and so on, which we discussed yesterday.
Okay.
However, there are equally at the other end of the spectrum, other assets where there is marginal interest or, selective interest in certain portions of the business.
Yes.
Now, the COC will need to decide in their wisdom that is it really worth handing over this business with a huge haircut to the existing promoter, or given their past record in defaults and also, just once and for all, let the company go into liquidation. No, suppose there is no new guy. What do you do? Let the company go into liquidation rather than throw good money after
Fair
bad.
point.
So that's an important issue.
Actually, we have a banker who has gone through these painful decisions, Uday. So please stay on. We have Mr. Pradeep Kumar joining us, the former Managing Director of State Bank of India. Mr. Pradeep Kumar, you must have gone through what news reports are saying about the contents of the ordinance, that willful defaulters will be barred. And also, there were other minor details. It will bar a person who has indulged in preferential transaction, undervalued transaction, or fraudulent transactions. What does this mean to you as a banker? Does it put the promoter in any disadvantage?
See, I think all these were implicit earlier. Now, I think the ordinance has made it explicit. The promoter was indulged in all these transactions. He's at a disadvantage. But I think it will require an investigative audit or a forensic audit to find out whether these things have been done.
Okay.
I think if I've been listening to the news TV channels yesterday, I think most of the promoters have not been declared as willful so far. Whether the investigative audit or forensic audit will reveal anything, that's a moot point. If it reveals something, it will go against the promoter, and the promoter will not.
We have incoming information that what we told you yesterday is exactly what is coming in the ordinance. That much has been confirmed by sources in the finance ministry. So we can at least elaborate what we told you yesterday. The important points were explicitly tells the committee of creditors to consider viability of a resolution plan, empowers the IBBI to specify what is a viable plan. And we just had on November 8th the regulations from the IBBI detailing what they mean by viable plans and asking the committee of creditors to look at who are the associate companies, subsidiaries who are applying along with the resolution applicant, what is their track record, as well whether the resolution plan is a sustainable plan, whether it leads, what I guess they mean is whether the debt is sustainable and the business can survive with that kind of debt. So this is what the IBBI has directed the creditor of companies, and now it looks like the ordinance empowers the IBBI to do just that. That's exactly what we had reported yesterday, and now we have confirmation that that is what the ordinance is saying. IBBI empowered to specify what is a viable plan, and explicitly the ordinance tells the committee of creditors to consider the viability of a resolution plan. Now, Mr. Pradeep Kumar, how does life change for a banker who's sitting in an NCLT?
I want to reiterate, I think these are all implicit earlier. Nothing new. It has become explicit, that is all. I think the committee of creditors will always look at the viability of the project from various angles, about the new money that is coming into the company, whether the debt is sustainable, what amount of debt is sustainable.
Okay.
All these things, and ability of the new promoters to run such large units. I think all this would have been considered by the committee of creditors, whether it is explicitly said by IBBI or not, because it will be evaluated as a loan proposal.
So you don't think that this is making life a little tougher for the promoter?
No, only thing it is changed is, hypothetically, let us assume that the promoter comes up with a scheme which has a lower haircut compared to the other bids that have come.
Exactly.
And if the promoter is now either a willful defaulter or he has done some transactions which are not above board, the bankers can reject it. Earlier, maybe it would have started some new litigation by the promoters because there is nothing specific laid down. Now this has been specifically laid down, the promoter cannot litigate.
Oh, okay. That's an important
that is only
point.
an advantage to the bank. Maybe if they accept a plan with a higher haircut given by a third party other than the promoter,
you have legal cover.
Legal cover, and also maybe the Damocles sword of investigation later by some of the agencies. No?
Yeah.
That is off the
But do you think as a banker, you will prefer a person without a record of NPAs, even if he asked for a higher loan haircut? As a banker, which way would you tilt?
We'll have to see. It is very difficult to give a judgment on without knowing the facts of a case. It will be dependent on the facts of each case.
Sure.
Each case is different. Each bid is going to be different. Each company is different, and the quality of each bid is going to be different. We'll have to take a judgmental call on that particular bid. It is very difficult to give an overarching rule saying, yes, I prefer X over Y.
So you would not still go to the extent of saying that this ordinance disadvantages the promoter?
See, only advantage to the bank is if the investigative audit reveals something, it will be easier for the bank now to say no to the promoter.
Okay, fair point.
Okay.
Yeah. So that decision making becomes easier.
Earlier, because the process of declaring a willful defaulter is very long. So, but the investigative audit, if it throws something and there is prima facie evidence, the bank can take a call that he has siphoned money or there has been some malfeasance.
Fair point.
Whatever has been defined in the ordinance.
Yeah.
Then the bankers can take a call that we will not consider the bid of this promoter.
Fair point, sir. Do stay on.
So that to that extent, yes, that is very clearly said later on.
Okay.
It gives, but of course, I have been saying from yesterday, investigative audits take long time. It is not going to be easy, and many of these are large projects where a lot of project expenditure has been incurred between 5 to 8 years back.
Yes.
So if the investigative audit has to go to 5 to 8 years back, what is the time that is required? That is my question. How much time will it require to complete a qualitative investigative audit?
You tell us. Okay, let me get Mr. Ashwani Parekh on that. In his time, he must have seen many such investigative audits. Mr. Parekh, what is your sense? How does this ordinance change? Is it very difficult to do an investigative audit? Is it very time-consuming?
Well, it is time-consuming because, you're talking about looking at all the previous transactions, all the records of the promoter, and now what may happen is, it's not just one promoter. You may find that with the law coming in, you have to make sure, the bankers will have to make sure that all the bids, the promoters who are behind, that is the new promoters or the bidders who are putting up the bids, their record will also have to be verified if there is any indicator.
Okay.
Because that's the long
So does it delay the whole process, you think?
Yeah, so that's, now what may happen is that, let's say, even if the bankers and the COC were to, let's say, accept a certain bid, for instance, and it does not suggest a very harsh haircut, but much later it is found out, by way of any evaluation or examination of the record of that group of people or bidders or a single bidder.
Yeah.
Then it does become very difficult for the bankers to explain away because now it's law.
So, but that would have been anyway, with or without this ordinance.
It would have been. I agree entirely with you. But now what will the law will demand or require that all the bids are examined, the bidders are examined from the point of view of, let's say, any record, any adverse record that they may have in the banking system. So that's and then there's just one more dimension that I thought I'll quickly add, Lata, and that is we were told yesterday at the FM's brief that there will be also some clarity on the independence of the RPs, basically.
Yes.
And so I'm just waiting for the text, and I'm just trying to understand what exactly is being talked about, because as one of the important constituents of this mechanism, it's important really that we'll have to understand what does it really mean to the RP in terms of independence and to establish independence, basically.
Okay. Well, we are at a loss now, and from the text we had yesterday, I didn't notice any extraordinary powers of the IRP being detailed over there. What we got more in terms of detail was which are the kind of bidders who won't be allowed, and that's now fairly well known, willful defaulters, undischarged insolvents. On the IRP, we have not yet got too much detail. As well, we've got details that the committee of creditors will have to look at the quality of the bid and not just maybe a numerical loan haircut. That's about the details we have. We'll do one thing, Mr. Pradeep Kumar, Uday Bhansali, Ashwani Parekh, we'll thank you for the moment for joining us. We'll come back and hopefully in a bit we will get the ordinance in black and white. Back to you, Samira.
All right, Lata, thanks very much for taking us through that. We'll wrap up on Mid-Cap Radar, but we'll track the markets once again when we return with your stocks. Stay tuned.